Hey everybody, thanks for joining me here at Bitcoin and Crypto News. Today we're going to change up things a little bit. Instead of going over the news and some of the market prices, instead we're going to go over one of my personal favorite investment vehicles and one that I feel is very underutilized, and that is a Roth IRA. So without any further ado, let's get into it. A Roth IRA is an individual retirement account that allows qualified withdrawals on a tax-free basis provided certain conditions are satisfied. To put that simply, it means it is a retirement account where contributions are made with money that has already been taxed, so no taxes are paid when you withdraw your money as long as you are at retirement age, which is defined as 59 and a half years old. So you may be asking yourself, who is a Roth IRA for? Personally, I'm of the opinion that nearly everybody should have a Roth IRA. Once you have enough money set aside for a rainy day, you need to start investing that, especially since our dollars are being devalued by at least 2% a year. But based on the numbers from 2020 and 2021, that may be closer to 10% than it is to 2%. But regardless, you need to start getting yield on your money and not that 0.01% that your local bank is offering when you create a new savings account with them. You need some assets that will appreciate as the currency continues to depreciate. This will hopefully help you overcome inflation and maintain your purchasing power. So after you have that rainy day fund set aside, the first thing you need to do is, if you have an employer that offers a 401k match, you should set that up and max it out, but only to the amount that your employer matches, since that is free money. For me, my next step was then setting up my Roth IRA. I chose to have it automatically deposited every week, also known as dollar cost averaging, set to where I would reach my maximum contribution for the year, which is $6,000 currently, but we'll get into that more a little bit later on. After I had my 401k match and my Roth IRA set up, whatever's left over, you can invest in a traditional IRA, you can throw it in Robinhood, or if you're like me, you can buy some crypto and Bitcoin. But really, the name of the game is to get some assets, whether that's Pokemon cards, stocks, cryptos, or whatever it is. Anything is better than holding on to cash. You need to let your assets work for you. So if you're like me, before I opened up a Roth IRA, I was very confused on what a Roth IRA or a traditional IRA was, and what's the difference. So let's get into that. First up, let's take a look at a Roth IRA. This is where your money isn't tax deductible today. But the key here is that you won't pay taxes on it as it grows, and you can withdraw all of it tax-free once you've reached retirement age, which again is 59 and a half years old. Since you are putting money into a Roth IRA that you have already paid tax on, this can be negative due to the fact that you're not able to lower your tax burden by decreasing your taxable income like you would with a traditional IRA, 401k, or some other investments. But that does have its benefits of you being able to withdraw that money after you're 59 and a half, tax-free, no matter how much it gains and appreciates. On the other hand, we have a traditional IRA. One of the key benefits with the traditional IRA that it allows for tax-deductible contributions, which simply means you'll get a tax break up front, which will lower your tax burden for the particular year that money was made. But the downside on that, you will pay tax when you withdraw the money later on in life. So one of the questions you'll need to ask yourself before deciding which is best for you is, do you believe you will make more money today or when you are past retirement age? If you make more money now, a traditional may be best to lower your tax burden today. However, with the way things are trending and increased taxes seeming more and more likely as our Federal Reserve and government continue to print more money, who knows what the tax rate will be in 30 to 40 years from now when you're looking to retire, if you're setting this up while you're in your 20s. So it may be hard to predict 30 to 40 years out. Just to give you a real life example, let's say your income right now is somewhere between $40,000 and $441,000 per year. Your federal long-term capital gains rate would be 15%. Keep in mind, this doesn't include any state taxes if your state has capital gains, which many of them do, and you've officially made it. Your investments are now worth over $1 million in gains, and now it's time to withdraw. If you are in a Roth IRA and you are of age, so you're 59 and a half or older, your capital gains tax on that $1 million would be $0. And it also does not increase your income bracket if you're still working or have investments paying you dividends. On the other hand, if this is a normal investment, whether a traditional IRA, 401k, your Robinhood account, Fidelity, and so on, you would be responsible for that 15% tax, plus it would count towards your income, technically increasing you to the next capital gains tax bracket of 20%, plus increasing your tax bracket for the year since it counts as income. But sticking with the 15% just to keep it simple, your tax burden on that $1 million would be $150,000. So yeah, that number is a bit dramatic, especially since I don't believe you'll be withdrawing $1 million in one shot in 1 year if it's your retirement plan, but that is a hell of a tax burden, especially in retirement. So there's really no wrong answer here. You just have to weigh the pros and cons for each. And before we get into the pros and cons, let's take a look at some of the limitations for a Roth IRA. The current limit for a Roth IRA is a contribution of $6,000 per year. If you happen to be 50 years or older, you can contribute up to $7,000 since you're closer to retirement. Compared to a traditional IRA or a 401k that is not capped, this can be somewhat limiting since you can only contribute $6,000 every year. There are also some income limits that may affect you as well. As of 2021, you must earn less than $125,000 individually, or if you're married and filing jointly, you cannot earn more than $198,000 per year. But if you do find yourself earning more income than what is allowed, there are workarounds, such things as a backdoor Roth IRA. So if you happen to fall into that category, make sure to look that up. Another question that I had was, what happens with my money? Is it locked in there? Am I able to move it? So let's take a look at that next. One of the biggest benefits of a Roth IRA is that you can withdraw your contributions anytime without penalty. However, if you dip into your investment earnings before you turn 59 and a half, you may owe a 10% penalty and taxes. Let's break that down a little bit. Say you put $10,000 into your account, and your account grows and it has risen to $15,000. You could take out your initial $10,000 investment without any penalty, taxes, or fees, but anything more would be subject to penalties and taxes. But also, you really don't want to be pulling out of your retirement fund unless it's an absolute emergency, because by doing this, it will limit the effect of compound interest, which is one of the strongest factors when investing. Remember, time in the market is better than timing the market. All right, and let's get into the pros and cons of a Roth IRA. So these are just some of the pros. These are the ones that I felt are most important for me. Number one being that you have tax-free income in retirement after you're 59 and a half. So whether you're still working part-time or perhaps you're just living off your investments, the benefit of this being tax-free and also not counting against your income is truly unique, and there's no other investment like it. Also, the ability to have tax-free withdrawals on your contributions is unlike anything else, whether that's dipping into an emergency fund or just having the ability to have some liquid cash for when that rainy day arrives. Also, another benefit is income diversification. As you retire, perhaps you're living off your dividends and you don't want to cross over a certain threshold to pay higher taxes. This does not count against your income. Another great benefit is that there's no income tax for an inherited Roth IRA. So this means if you pass your Roth IRA onto your children or through a will, their withdrawals from your account will also be income tax free. All right, that's enough of the positives. Let's get into the negatives. Arguably the biggest is that it's non-tax deductible, so there's no tax write-off. Depending on how much you make and where you live, this may be one of the largest drawbacks to using a Roth IRA versus a traditional IRA. Another negative is that you cannot use as loan collateral, meaning let's say you want to apply for a mortgage, you're not able to claim your Roth IRA as part of your assets, which may limit the amount of money that you're able to borrow. Another thing that you have to factor in is that you have to wait until you're 59 and a half to withdraw your money, or you will have to pay a 10% penalty plus taxes. Keep in mind this is just on the capital gains within the account. You can withdraw your initial investments at any point for free. Also, like we spoke about briefly before, if you make more than $125,000 per year, you're not eligible. However, like I said, there are alternative options like a backdoor Roth IRA, so if you happen to fall into that category, be sure to look that up and check out your options. I know what you're thinking, this is a crypto channel, so of course we got to tie this into crypto somehow. And before we get into this, I want to point out this is not a sponsored video, this is just my personal opinion, and in the case of iTrustCapital, what I use personally. Up until recently, I was using M1 Finance, which is your traditional Roth IRA where you can invest in stocks, mutual funds, ETFs, and everything like that. This prior fall, I decided that I wanted to move my Roth IRA over to a crypto one. So I did some research, and I felt that iTrustCapital was the safest place for me to put my money. So a little background on iTrustCapital that allows clients to buy directly and trade cryptocurrencies and physical gold in real time through their retirement accounts. If you'd like to see me do a deeper dive into iTrustCapital, make sure you hit the like button and comment below to let me know to review it, and I will. There's also a referral link down below if you'd like to check them out. I do want to point out one thing about iTrustCapital. Although I am extremely happy with it, there is a monthly fee to use their service. Just briefly, I want to show you the crypto offerings they have. So of course, they have Bitcoin, Ethereum. They have also added a bunch of altcoins over the past few months. Personally, I began using them around November, and all that was available at that time was Bitcoin, Ethereum, Litecoin, gold, and silver. So as you can see, they've added things like Cardano, Chainlink, Polkadot, Uniswap, Aave, and many, many other. Hell, they even added Dogecoin. Plus, another thing that interested me with iTrustCapital was the fact that they did offer silver and gold. Even though I'm not the hugest gold and silver fan, it is nice to have an alternative option in case I want to diversify my Roth IRA a little bit. Just so that you don't think I'm biased, I wanted to show another popular choice that I haven't personally used, but they're a sponsor for a ton of podcasts that I listen to, and from everything that I see on their website, they seem like they're very reputable, and that is retirewithchoice.com. Since I've never used them, I really can't give you that much information on them other than that I've heard about them on people's podcasts, and they seem reputable. But if you are interested in a Roth IRA, or even specifically in a cryptocurrency Roth IRA, definitely check these two out. And remember, since they're tax-free, if we're right and Bitcoin goes to these crazy prices, the fact that it's tax-free may be one of the best decisions you'll ever make in your life. And here's just a screen grab with a little bit more information about Retire with Choice. They have 3 different membership options, 125,000 accounts, and $18 billion in assets. So definitely not some small mom and pop shop. They also do have some major partnerships with the likes of Casa and Fidelity. So to wrap this up, like I said earlier, I feel that a Roth IRA is potentially one of the most important things someone can set up, especially while they're young, and get the full benefit of compound interest over their entire career and their life. But like the famous quote, the best time to plant a tree was 25 years ago. The second best time to plant it is today. So whether you're 20 and just starting out your career, or you're 40 and hopefully only have 10 or 15 years left, it's never too late to start, but the earlier the better, so you get the full benefit of the compound interest. Despite this, it is definitely not for everybody. You should be sure to do your own research and find out what's best for you. And hey, at the end of the day, who knows? You may end up like Peter Thiel with $5 billion in your Roth IRA. And remember, that's all tax-free. But the most important thing to do is get your money out of the dollar and into some type of investment. Even if it's just putting it into a Vanguard fund and forgetting about it. That is almost certainly going to perform better than if you left it in cash. Here's an interesting chart from WTFHappened in1971.com that shows the cumulative inflation rate from 1913 to 2015. And keep in mind, this is missing the impact of the last 18 months where the government has gotten their finger stuck down on the money printer. But looking at a smaller time frame since 1981 to today, which is 40 years, so your typical career and time frame where you would be able to withdraw from your Roth IRA, inflation has went from around 780% to 2,326%, which is over a 3x increase. And once you start adding in all of the stimulus that has recently been thrown into the economy, that is about to go much, much higher. So for those people who kept most of their wealth in the dollar, so those who kept the majority of their money in cash during that time frame, so their purchasing power decreased by 1,500% during their career. And the chart on the left shows that in 1971, the cost of a new home was $25,200. In today's dollars, that barely gets you a beat-up 2012 Toyota Corolla, the way the used car market is today. Thanks for checking out the video, and I appreciate you spending your time with me today. I hope this video helps clarify some things about Roth IRAs and investing in general. If you found the video helpful, please hit the like button and subscribe. It really means a lot and helps get the video out to others. Have a great day.